Welcome to the Dinar Daily. Today, we are examining a landmark development in Iraq's financial narrative, an announcement that has reverberated through international economic circles and captured the attention of market observers globally. For a considerable period, those who follow the trajectory of global currencies have been anticipating a moment that could signify a fundamental shift in the perception of Iraq's economic framework. This moment appears to have arrived, marking a potential turning point that is rooted not in speculation, but in years of deliberate policy implementation and strategic financial management. The core of this news revolves around a change in classification for the Iraqi dinar, a recategorization that carries substantial weight within the architecture of global finance and could reshape how the nation's economy is viewed on the world stage. For many years, the Iraqi dinar has been classified under the label of an exotic currency. While the term might evoke images of rarity or unique value, its meaning within the financial industry is far more pragmatic and serves as a note of caution. This designation is typically reserved for currencies that are perceived by the global banking system as having higher levels of risk, often due to factors like significant volatility, limited convertibility, or association with an economic environment that is considered unstable. Functionally, this label acted as a deterrent, creating operational hurdles for international banks and financial institutions that might otherwise engage in transactions or investments involving the dinar. It created a climate of hesitation, where the perceived risks often outweighed the potential opportunities for engagement with Iraq's markets. Being on the exotic currency list imposed tangible limitations on the Iraqi economy. It meant that international trade was often more complex and costly, as fewer major banks were equipped or willing to handle large volumes of dinar transactions directly. This frequently necessitated convoluted processes involving intermediary currencies, adding friction and expense for Iraqi businesses and their international partners. For foreign investors considering projects within Iraq, the currency status represented a significant variable of uncertainty, potentially discouraging long-term capital commitments. This classification, therefore, was not merely a symbolic label, but a practical barrier that contributed to a sense of financial isolation and tempered the nation's full integration into the global economic ecosystem. However, a pivotal announcement has confirmed that this long-standing classification has now been officially rescinded. Iraq has been formally removed from the exotic currency list, a move that is being interpreted as a powerful endorsement of the country's extensive efforts to reform and stabilize its financial foundations. This is not an arbitrary decision, but one based on the measured assessment of global financial bodies that have observed the progress made within Iraq's economic and banking sectors. This development signals a newfound level of trust from the international community, acknowledging that the systems Iraq has put in place are now robust enough to be considered credible, stable, and aligned with global financial standards. It is a recognition of a long and arduous journey toward fiscal normalcy. At the heart of this transformative news is a declaration from the Central Bank of Iraq, which has articulated its position with a clarity that has resonated with international markets. The institution has stated that Iraq now possesses foreign reserves that are both sufficient and convenient, empowering it to effectively defend the exchange rate of the national currency. This statement is a cornerstone of the recent development, as it directly addresses one of the primary concerns that kept the dinar on the exotic list for so long: its perceived vulnerability. In practical terms, this means the central bank has amassed a substantial treasury of stable foreign currencies, such as the US dollar and the euro, which can be deployed to maintain stability in the dinar's value. To fully appreciate the significance of this capability, it is essential to understand what convenient foreign reserves represent. This term refers to the central bank's ability to not only possess these reserves but to access and utilize them swiftly and efficiently in response to market dynamics. This functions as a powerful financial stabilization tool. For instance, should external pressures or market speculation cause the value of the dinar to decline rapidly, the Central Bank of Iraq can intervene. By using its foreign reserves to purchase Iraqi dinars on the open market, it can effectively reduce the available supply of the currency, thereby applying upward pressure on its value and countering the decline. This proactive capacity is a hallmark of a mature and well-managed economy. Conversely, the same mechanism allows the central bank to manage a situation where the dinar's value might appreciate too quickly. A currency that becomes too strong in a short period can negatively impact a nation's export economy by making its goods and services more expensive for foreign buyers. In such a scenario, the central bank can sell dinars from its holdings, increasing the supply in the market and tempering the rapid rise in value. This ability to moderate the exchange rate in both directions, to prevent excessive depreciation and to cool down excessive appreciation, is a sophisticated level of monetary control. It demonstrates that Iraq's financial authorities have moved beyond a reactive posture and are now equipped to strategically manage their currency's position in the global market. The attainment of this status was not the result of a single event, but the culmination of a sustained, multi-year campaign of comprehensive financial and institutional reform. The journey involved a deliberate and methodical overhaul of Iraq's banking system from the ground up. The Central Bank of Iraq has been instrumental in this process, systematically introducing and enforcing stricter regulations on financial institutions to enhance their stability and transparency. These measures were designed to align the Iraqi banking sector with international best practices, fostering a more secure and predictable financial environment for both domestic and international participants. A goal was to build a system that was resilient, accountable, and worthy of international confidence. A significant component of this modernization effort has been the development and promotion of advanced digital payment systems. By encouraging a shift away from a cash-dominant economy towards electronic transactions, the central bank has been able to improve the efficiency and traceability of financial flows throughout the country. This not only enhances convenience for citizens and businesses, but also provides the authorities with more effective tools to monitor the economy and combat illicit activities such as currency smuggling and money laundering. These technological advancements have been crucial in demonstrating that Iraq is committed to building a modern, transparent, and well-regulated financial infrastructure capable of supporting a growing and diversifying economy. Simultaneously, a core focus of the Iraqi government and its central bank has been the diligent management of inflation. For years, inflationary pressures posed a significant challenge to the economic stability of the nation and the purchasing power of its citizens. Through disciplined monetary policy and careful fiscal management, the authorities have worked tirelessly to bring inflation under control, creating a more stable economic climate. This success in managing domestic price levels was a critical prerequisite for achieving currency stability. By proving its ability to maintain a predictable economic environment at home, Iraq laid the essential groundwork for gaining the trust and respect of the international financial community. The methodical accumulation of foreign currency reserves was perhaps the most visible aspect of this long-term strategy. Over several years, Iraq has strategically built up its holdings of major international currencies, storing away billions of dollars in assets. This was achieved primarily through the careful management of its substantial oil revenues. Rather than allowing these funds to be consumed entirely by short-term expenditures, a significant portion was directed toward bolstering the nation's financial defenses. This growing stockpile of reserves served as a tangible guarantee to the world that Iraq had the necessary resources to back its currency and honor its international financial commitments, ultimately paving the way for its removal from the exotic currency list. This change in status has profound implications because it effectively unlocks doors that were previously shut to the Iraqi economy. Financial institutions around the world that may have had policies restricting or prohibiting dealings in exotic currencies may now reevaluate their engagement with Iraq. This could lead to a broader and more seamless integration of the Iraqi dinar into global banking operations, making international transactions smoother and more efficient. For multinational corporations and private investors, This de-risking of the currency could make Iraq a more attractive destination for capital, potentially spurring a new wave of interest in sectors beyond the nation's dominant oil industry. To draw a parallel, the monetary policy tools that Iraq can now deploy are standard practice for some of the world's most stable economies. Nations like Switzerland, for example, have a long history of using their vast foreign reserves to intervene in currency markets to protect the value of the Swiss franc. When faced with downward pressure, its central bank can buy francs to support its price. Similarly, when China's monetary authorities wish to influence the value of the yuan to support their export-oriented economy, they can adjust its supply on the open market. The fact that Iraq is now recognized as having this same fundamental capability places its central bank in the company of the world's major monetary institutions, a crucial and enduring pillar supporting Iraq's financial position is its immense wealth in natural resources, most notably oil. As one of the world's leading oil producers, Iraq benefits from a consistent and substantial inflow of foreign currency, PREDOM and ANTLY US dollars, from the sale of every barrel on the international market. This steady stream of revenue serves as the primary engine for replenishing and growing the central bank's foreign reserves. This provides a powerful and reliable financial backstop that is the envy of many developing nations, giving Iraq a unique and durable advantage in its efforts to maintain a stable and credible currency over the long term. This constant influx of oil revenue provides a resilient financial cushion that enhances the stability of Iraq's reserves. Even in the face of global economic volatility or shifting market sentiments, the greater the volume of oil that Iraq successfully exports, the more robust its reserve position becomes, and the more fortified its ability to protect the dinar from external shocks. This fundamental economic reality is a key reason why many financial observers note the strong underlying fundamentals supporting Iraq's currency. The nation's oil wealth is not merely a source of government funding. It is the bedrock upon which the entire currency stabilization strategy is built. Providing Iraq with significant leverage, the implications of this development extend to various segments of the economy and society. For individuals and entities holding the Iraqi dinar, this news is widely seen as a validation of the country's progress toward creating a more secure and predictable economic future. For business owners both within Iraq and internationally, the removal of the exotic currency label promises to reduce the complexities and risks associated with trade and investment. It simplifies cross-border transactions, lowers associated costs, and fosters a more business-friendly environment. This could encourage new partnerships and open up new markets for Iraqi goods and services on the global stage for the citizens of Iraq. The establishment of a stronger and more stable national currency could have a direct and positive impact on their daily lives. A currency that holds its value consistently can lead to lower levels of inflation, particularly for imported goods, which can make essential products more affordable for households. This in turn helps to protect the value of personal savings and enhances the overall purchasing power of the population. Consequently, this is not an abstract financial maneuver but a development that carries the potential to improve real-world economic conditions and contribute to a higher quality of life for millions of people across the country. It is, however, important to approach this development with a balanced perspective, recognizing that the management of a national currency is an ongoing and complex undertaking. The removal from the exotic list and the possession of strong reserves mark the beginning of a new chapter, not the end of the story. The Central Bank of Iraq will now face the continuous task of actively monitoring global financial markets, which are in a constant state of flux. It will need to remain agile, responding to emerging economic data, shifts in oil prices, and changes in global capital flows with timely and well-judged policy decisions. The coming months will be a critical period of observation for the international community. Global markets, investors, and partner nations will be watching closely to see how Iraq's financial authorities handle their new responsibilities and navigate the complexities of the global economic landscape. Sustaining the trust that has been earned will require a continued commitment to the principles of fiscal discipline, prudent policymaking, and institutional resilience. The challenge ahead will be to demonstrate that the progress made is not temporary but is part of a permanent and structural transformation of Iraq's economic governance. A key factor in Iraq's recent success has been a marked improvement in institutional transparency. In the past, financial announcements from the country were sometimes perceived as opaque or lacking in detail, which could create uncertainty and fuel speculation among investors. In contrast, the Central Bank of Iraq has recently adopted a more open and direct communication strategy. It has been clear about its policy objectives, providing detailed explanations of how it intends to defend the dinar's exchange rate and the structure of its reserves. This level of clarity is precisely what global markets require to build lasting confidence, as it allows for a more accurate assessment of risk and opportunity. The timing of this development is also particularly noteworthy. It comes at a time of significant shifts in the global economic order, with many investors and multinational corporations actively seeking new opportunities in emerging markets. As traditional economic powerhouses face their own unique challenges, capital is increasingly flowing toward nations that can demonstrate stability and long-term growth potential. By methodically strengthening its currency and restoring international confidence, Iraq is effectively positioning itself to capture a share of this global interest, presenting itself as a compelling, resource-rich market that is now on a much more stable financial footing. With its new status, the potential for subsequent positive developments is considerable. International banks that had previously limited their exposure to Iraq may now consider expanding their operations, opening new branches, and offering a wider range of financial services within the country. This could lead to a more competitive and sophisticated domestic banking sector. Furthermore, as the dinar gains more trust, global companies may begin to price their goods and services directly in the Iraqi currency, rather than relying on the US dollar, which would represent another significant step toward the normalization and internationalization of the dinar. Of course, Iraq continues to face a range of domestic and regional challenges that could impact its economic trajectory. Ongoing political divisions, the need for significant investment in public infrastructure, and the complexities of regional geopolitics are all factors that require careful management. However, the critical difference between the past and the present is the strength of the underlying economic foundation. The credibility that Iraq has now earned through years of consistent effort and tangible results is an invaluable asset. This credibility, which cannot be purchased with money alone, will be a crucial element in navigating the challenges that lie ahead. In a broader sense, this financial transformation carries a deep symbolic meaning for the people of Iraq. For decades, the national currency has been inextricably linked with periods of conflict, international sanctions, and profound economic hardship. It was often seen as a symbol of the nation's struggles. Today, however, the dinar is increasingly becoming a symbol of recovery, resilience, and national pride. A stable and respected currency can help to rebuild trust between citizens and their public institutions, fostering a shared sense of confidence in the country's future direction and its place in the world. In conclusion, the removal of the Iraqi dinar from the international list of exotic currencies is far more than a technical reclassification. It is a powerful statement to the global community that Iraq is re-emerging on the economic stage with newfound strength, stability, and determination. Supported by substantial foreign reserves, a clear and credible exchange rate strategy, and growing respect from international financial institutions, the nation stands at the threshold of a new economic era. This development is the result of years of disciplined reform and strategic planning, and it lays a much stronger foundation for future growth and prosperity. The economic story of Iraq is an ongoing one, and this moment marks a truly significant and historic milestone.